Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 2nd of August, 2023, time 6:10 p.m. As much as I want to do these earlier, I'm just too busy right now to get that done. And I know some of you would like me to do that. It just doesn't work that way all the time. I'll try. I'm working schedules around. So, do you think it was the Fitch downgrade that broke today's market? I'm not convinced it was, but it's overdue. I am not their enemy for doing that. I realize Janet Yellen's job, because she's politicized under the Biden administration, is to go, this is totally unwarranted, blah, blah, blah. Let me tell you what's unwarranted. What's unwarranted is elected leaders that don't get the right things done in America. It's that simple. Look in the mirror, leaders, get something done. The whole world's telling you, get things done. Things done doesn't mean that you're wiping off debt. Things done doesn't mean you're doing more spending. Things done mean you work towards balancing a budget and you're doing nothing about it. Things done, President Biden, means you'd have bought crude oil $10 lower and put some back into the reserves. You have every reason for not doing things, and you're very good at it, all right? I am not political per se. I would say the same about Trump when he did these things. I mean, come on, we got a candidate that's now indicted 3 times, and he's the front runner to be the president of the Republican Party. I mean, you could write science fiction books about this. It's so crazy. And the other guys behind them, they're nowhere. Nobody wants to give any of them money. All right. There's got to be a reason why. It's not, you can't tell me that Trump, all his policies were bad if that's the case. Or can you? Maybe you can. Maybe the whole Republican Party's crazy. I don't know. People could be. But I think Fitch was right. I think they just said what we've all known. We're not getting anything done, and they did it. But do I honestly think that that broke the market? No. What I think helped the market much more was seeing the quarterly refunding that the Treasury needs to get done because we're not getting enough taxes in and we're not cutting spending. And you need to get $1 trillion in a quarter. Whoa. What have interest rates been doing? What have I been telling you in this update? I said they've done one thing. They continue to fall. Real rates are going higher. That is a problem. And I have been amazed that the stock market didn't pay more attention to it. Did this break end the stock market rally? All it did is a short-term pause. You haven't hurt the companies. Now, eventually, higher rates are going to bite everybody. It takes time. There's a lag effect. We'll get to it, all right? It won't not happen, in my opinion. It's not going to happen in 2023, but it is coming. When? We'll see. When you look at the S&P, one of the things that I was telling you, are you just going to go up at this point and take these highs out? I said, it's doubtful. That I'm not picking a top. All I said is it's doubtful. So to get a correction is of no surprise. How big is this correction? We think it's monstrous. You are down for the week 1.38%. Come on, that's not a big deal. Did we not say before today, let me walk you through what we were doing here. I know what I was saying. I said, I think we have distribution going on up here. Could it launch higher? It certainly could. Could it break down? It could. Okay. We take a look. It finally did break down. It got under all these lows. So we have right now what? We have a trade top in place. Until you get through these highs, the market's got a trade top. That's bearish. Now we have to look at where the support levels are under the market. So I go to my trusted friend, the 18-day average of closes. We closed under it for the very first time since back here at the beginning of July. If you'll notice back here when you got under it, you didn't stay under it very long, nor here, nor here. So it's got to prove to me that it can do more than a flash break and have legs to it. If it does, where might it go? That's where you put the Bollinger Bands on. And the Bollinger Bands up here and down here, it's telling me that from current prices, if you were to drop another 50 points, I'm looking for major support in the 44.90 level. And momentum is already, with tonight's reopening, oversold. Any reading under 30 is oversold. If you're a student of the Bollinger Bands the way that I am, this is screaming at you that if you're bearish, what you have to do. In the micro NASDAQ, you're already oversold. You got a 24 reading. In this market, you had been fighting up till today. Let's take a look and see what we've got because it's so clear. You have been fighting to keep the support with higher lows, barely higher high, barely. And will the market hold there or get through this low? And I said if you get through that low, well, then you open the door. Could you get down to the 15,156 level? It's the only other number I have open on the chart. And it's still very much there. It is not got higher lows, higher highs. So this is more of a trading affair all of a sudden. In the micro Dow, it still has the bullish bias. However, there's a real problem. One of the highest percentage things that I see is when you lose an embedded reading, which you lost today when the market closed, if you will here, 79 is what you had to close under. You didn't close under it. You closed 79.04. You got to prove you can stay down. This market can come back and bite you tomorrow. You heard what I said. I know you're going to say, Ira, 79.04 isn't 79. I get it. But it's still, I need a number. That's all. And I have found that number with all the years of research I've done to be the number I like to work with. What happened here? So we come to the Russell. And in the Russell, this is the close yesterday, 85. This is the close today. You lost your embedded reading. Now, all that it's owed is the 18-day average of closes. Doesn't have to go any further. That's all my work says it's worth. The closest main moving average, yes, it hit it, but it closed right over it. That's all it had to do. Could it drop further? It could. Doesn't owe it. Now, you take a look at the T-bond market. You're making new moves. I pointed out to you this week that this market, all of a sudden, and I know everybody's saying you got to buy 10 years, 30 years and lock them into your portfolio. A lot of people won't do 30 years. You know that. I know that. They're nice to look at, but I don't have one friend that goes out and buys a 30-year bond. I have some very wealthy friends. They'll do 5s, they'll do 10s, maybe. They're always looking that if I lock in too long, what am I doing? But some of them have vast wealth and they have to do that. 30s, I don't believe. And you're just rocking with that. In the 5-year note, you haven't even hit the lower band yet. You're already oversold. If you do, the odds favor. That's what the short covering is going to take. Now, there's another event this week. I think it's jobs data. I'm pretty sure. We get the Bank of England tomorrow also coming out, and there's a slew of economic data tomorrow. I was looking at it and preparing tonight's written market research report. My gosh, there's so much economic data. You got a whole slew of it coming out in the morning. We'll see what it means, but there's nothing friendly here. This market's not on this chart action, in my opinion, going to go tomorrow and say, oh, let's go back up to the upper Bollinger Band instantly. Could it happen? You know, in the markets, anything can happen. Do I expect it? No. In the dollar, if you're a student of Bollinger Band theory, the way I teach it, doesn't mean I'm right. You're overbought. First challenge of the Bollinger Band, I think the pro money's coming out of the dollar right here. They're not bearish. They're liquidating the position or liquidated, either the whole thing or a big chunk of it, in my opinion. And the euro begins right here, which it's been at now for 3 days, the 100-day average. It might get to the Bollinger Band. You're already oversold. It has proven it's having a hard time getting and staying under the 100-day average. In the British pound, they're going to raise interest rates. I mean, nothing in life is sure. This is probably 99.9%. That they're going to get you at least a quarter-point hike, slowing the economy, and the market is falling. It's not going up because the pound's going to get more value because of it. This is how you slow the economy down. The game there is not to put it into a recession. Bitcoin. Tell me that you didn't go down the first time right here. And this, again, the Bollinger Band. Tonight I talk about Bollinger Band because it's so important. You make the first challenge of the 100-day average, the Bollinger Band. Now, you are embedded. That means, the way I teach it, you take a portion of your short off, a portion. And now you're on the lookout that if you lose the rest of it, you got to be out completely. Yesterday, didn't lose it. Maybe it'll be lost Thursday. It's a 22 reading. Any reading over 21 will take you out. You're already not up there. You don't panic intraday. You wait. Now, sometimes that can hurt you. Gasoline, a great example. Today it hurt. But you're always going to give something back on a bear market when it finally bottoms or a bull market when it finally tops. And I'm not talking the 5-year, the 10-year plans. I'm talking how the markets work on daily charts and weekly charts. In the crude, we have been in the differential down to the $4 mark. We haven't been there in a very long time. That was in June that you were back there. Hasn't really done anything. And I am not surprised that crude broke. What number was it running against? Now, if it's like this, I want to take you to something that's so important. 78.51. You're supposed to be out of longs at the close under 79. You remember, in the futures markets, the beauty is the settlement occurs before the close. Are you aware of that? If you're not, wake up. I don't know of any that close at the same time that they settled. The settlement prices are determined sometimes 5 minutes, sometimes 3 hours ahead of where it is. So you get a look-see, and then you learn how to play with that. That was, to me, a big warning. You lost the embedded reading, maybe. Let's go back a day. This is the close of business, 79.59. It didn't lose it. It can lose it now. It's got to prove it can come back. The market's higher, and you still are 5 points lower. So the odds don't favor it coming back, but it's possible it rescues itself. So you wait, you see what it's going to do, but the odds are you shouldn't be long anymore. Let the market consolidate the gains is what it's screaming. Gasoline's the biggest surprise to me of the group, because the market had a fully embedded reading. This was the first break, but it made the higher high first. And if you make the higher high, you can't be a buyer on the break, and boom, the market breaks down. Not a buy. Market lets go of it, but you made the higher high. Do we understand that? And once you make it, you can't own the market on the pullback. And that's what I teach in the course. And you got to learn why, and I teach it all to you, and away you go. And that's what the market is doing. Then in the natural gas, lower highs, lower lows. Have I not been telling you for a week on? And by the way, I get wrong a lot, so don't please take this, that's it. But every now and then I hit a stride where I get very right. And as this market was coming there, I said, we got all this heat. We're baking and the market's not going anywhere. That's not bullish. Did I expect that you'd come immediately down to the Bollinger Band? Absolutely not. But I knew not to be, and to tell my clients, and I did do that, no, I don't think you can be long. And I told it to you here. So you put it all together, and Bollinger Bands are the theory. You just hit the band. What would I be screaming at you? You're oversold. You don't want to be short anymore. If you are short, I'd be screaming, take some money off the table. And once you get into that habit of looking at it, and you learn, do you take it all? Do you take a portion? How do you go about it? I teach how to do that in the charting course. Whoa, you get another piece of ammunition you never saw. I don't need to know the name is natural gas. I don't need to know the name is gold, silver, copper. I need the chart patterns, and in many of my courses, I take the names off the charts. Do you know why? It's unimportant. You're trading the pattern in the market. Got it? So if you want to learn more, you move your cursor up here. I created an ad for you to look at. Invest in yourself. This is inexpensive, folks. I look at shirts that are 3 times, 2 times the price. I'm not talking fancy shirts, okay? Just dress shirts. And I crack up, and we're offering this education at these prices. So take a look at it. I think you'll find that it's well worth your time and effort. That's what this is about. And I'll see you in my S&P Spider, stock market, Spider. You have a good evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.